Hi, it's Lee, and welcome to the Tesla Economist. Alright, we are all the way down to $215. This downward movement doesn't seem to have stopped just yet. It looked like a good buy at 240. Well, now it's at 215. Does it look like an even better buy? We've entered the reverse supply and demand curves of the stock market. When prices are higher, demand is higher, and when prices are lower, demand is lower. Of course, all to do with fear and greed. It's a lot harder to buy stocks when there are threats of doom and gloom and potential recessions, financial crises, dwindling profits, or blood in the water. I've mentioned that I would likely start buying some leaps when the stock price got to about 220, but in all honesty, I have not yet. I'm still waiting to see how this unfolds, and will likely buy on the way up rather than on the way down. I would expect to see some solid resistance if we got close to 200, and might start buying then. The broad markets are down, and many other tech stocks too, but Tesla really got slammed. I mean, it did get pretty high in the first place, but it is likely an overreaction by this stage. There are looming issues with the economy in China, of course, right now, which is putting pressure on. Bitcoin has also been getting squeezed too, getting down to 25 at one brief stage. Yes, there is fear in the markets right now, but anything can happen. The sentiment can change in an instant and is always very fickle. But this is not a channel about trading Tesla. I just like to talk about the short-term impacts and what's going on to help you gather whether it's a good time to be buying or not. I mean, otherwise, what would be all the point of this channel at all? I could just do one tweet or X and say, hold until 2030. However, at the same time, we may not be able to control the stock price, but we can control our emotions and how we cope with any significant drops in the stock. It helps if we can try and gain clarity on what is happening. I like to understand what is going on in the economy and EV auto industry. I find it interesting and love to discuss it with as many people as possible, but I think we can simplify it pretty well. You're likely here because you believe that EVs are the future, or if not the future, will at least have a large impact on the auto industry and gain a considerable market share. A lot of consumers are not yet ready to transition yet, but EV popularity is still increasing and will continue to proliferate through the industry. On top of that, soon enough, current Model 3 and Y owners will have had their cars for over 5 years or so, and might even start to look at replacing them. And then all the repeat business will start to kick in, particularly if Tesla is offering a reason to upgrade. Sure, all the tech is about the same from about 5 years ago, and there's only really been minor improvements in hardware over those years. But if we see this Highland facelift, then that will likely spur many to think about upgrading, especially if the rumours about the new battery pack are true. Likely over 300 miles of range for a standard rear-wheel drive Model 3. Now, if you talk to bears or BYD investors, they will tell you we are wrong, one way or another. BYD is further ahead on vertical integration and selling more EVs in China, and all sorts of cherry-picked information to deter you as a Tesla investor. But the fact is, no one else is making BEVs at the rate Tesla can, and no one else is making a substantial profit in doing so. Remember, this is a tough time for the car market. With rates where they are, cars become more expensive. It's as simple as that. Yet despite Tesla adjusting their prices to offset the additional interest costs, Tesla is still making good profits. The so-called competition are coming in by subsidizing their vehicles to their customers. Some are subsidizing or losing over 6 figures per vehicle. This is the effort that others having to resort to in order to compete with Tesla. And even at that stage, I'm stretching using the word compete, as for one, their numbers aren't even close to Tesla's, and neither are their vehicles. Tesla don't just make the most popular EVs, Tesla is making the most popular vehicles, period. This has to account for something. And like we're saying, the industry is still growing. Tesla's sales are still growing, as is Tesla's production. There is still about 500 to 600,000 Model Ys a year capacity to come from Berlin and Texas too, which admittedly might be hard to push at this stage in the economy, and although these factories are officially limited by the cell supply they have available for the vehicles, if Tesla did increase production to this level, then it would likely have to result in some more price cuts in order to reach enough demand. At least currently now, where we are in the economy and where demand is for EVs. Or, of course, advertising. I think Tesla should be spending $250 million a year on advertising, really. Do it properly. I speak to people about Teslas any chance I get, and they simply don't get them. Or electric cars in general, for that matter. There is so much more education left for the consumer. For all those households that have 2 cars at least, which is a significant number, there are few reasons for them not to have at least one of them as electric. The infrastructure is still young though. We could have twice as many superchargers around in a couple of years. This has an impact on demand. It makes driving electric that much easier, less hassle or less stressful. And many of you listening now own a Tesla. You don't need to be convinced of just how much better it is than everything else. I was on the Big Island in Hawaii last week and was renting a Jeep. It was so basic when compared to a Tesla. And I bet like for like, the Tesla Model Y likely costs less, especially with the tax credit and fuel savings. And I say like for like, but obviously the Tesla would still be quicker, more luxurious, and have all those great tech features that no other vehicle has yet to offer to the same degree. Yet Jeep are still in business, people are still buying them. Of course, Jeep are too trying to make electric versions of their cars and losing a fortune doing so. Now, although the stock price is not hanging around 300 anymore and back closer to 200, there's no reason for any concern that I can see. We haven't had any major issues. I mean, a lot of this all started when we were told the factories were being shut down, of which we don't even have all the information yet. And many bulls perceive this as good news. Anyway, as it's a chance that when they reopen, we may see the Model 3 Highland, of which more photos are circulating. Seriously, we're seeing physical evidence of a new Model 3. Surely this is likely to appear sometime. The factories will close down and all existing Model 3 inventory will be exhausted. Then Tesla will announce an event of the Model 3 Highland first deliveries or something. We'll be given all the new specs and features of the car, and demand will increase, and possibly prices too, and costs should reduce. So margins should definitely move in the right direction. But to steal the limelight of that, we also have the Cybertruck delivery event sometime too. These 2 events should bounce the stock price back. It would appear that between 200 and 300 is an air pocket in the stock price, so it wouldn't take the market being too bullish to get it back there again. Supposedly also getting FSD version 12 sometime soon, which is meant to be a step change in performance. All big catalysts for the stock price in the near future. But the company will be a very different company by around the end of 2025, when we have the Gen 3 vehicles in high volume production, and hopefully some advances in Tesla in-house cell production too, along with a good chance that interest rates have finally come down. Tesla haven't basically shown us any new products since the Model Y in some ways. Since then, they've become a juggernaut of a company with almost unlimited resources, and they've been using this time and effort in order to research and develop the most optimal products, like this new Gen 3 vehicle, and of course the Cybertruck. There just hasn't been any need to release any new products because the demand for the existing products was so high, and used up current cell supply. If Tesla launched any new products, they would have been competing for cells. But there will be a new CATL LFP cell factory to serve the fab in Mexico. Cybertruck will have the Cybercell and Panasonic's 4680 to grow, and Texas and Berlin will grow with the ramp from the 4680 cells. Like I often say, this is a growth company, but with a very capital-intensive product and will take a long time. And over that time, all sorts of things will happen. Tesla will go in and out of popularity of the market, and the stock price will move as a result. But things are progressing, although I really would like to see them break ground in Mexico soon. However, in the meantime, we should have some decent events coming up. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.